January is now over for 2023, and the fog in my mind has started to clear about what actually happened last year. So in this video, we're going to be taking a look back at the massive $1.5 trillion of market cap and how it was just wiped out, just destroyed last year. And then we're going to take a look at why, in light of that, I'm actually starting to feel a little bit more bullish about the future and about what might be a good year for crypto in 2023. It seems like the Fed is calming down, so we have a lot to get to in this video. We're going to be using the help of ARK Invest, their awesome big ideas for 2023. So if that sounds good to you, remember to drop a big thumbs up, hit subscribe if you're not subscribed already, and let's jump into this one. So this is a really cool kind of timesheet on page 49 of Big Ideas from ARK Invest, talking about the contagion that was inside of crypto, all of the bad actors that caused this around $1.5 trillion of market capitalization to get wiped out in 2022. So it started off in early February. If we look down here, crypto companies, including FTX and Crypto.com, dominated Super Bowl ads, a sign of irrational exuberance. We also had a ton of money printing. Like, this wasn't crypto's fault as much as it was just like the M2 money supply just exploded. Interest rates were like completely at zero. The amount of stimulus was just insane. And all of a sudden we had a massive reversal from the Federal Reserve saying, hey, instead of going 80 on this 20-mile-per-hour road, we're going to slam on our brakes and stop dead. And we might even go into reverse. And that just caused everyone to have massive whiplash. But yes, this was a sign when crypto companies dominated Super Bowl ads that there was just a lot of spending, a lot of exuberance. And yeah, crypto thought we thought we were unstoppable. Okay, we got a little ahead of ourselves. Let's be honest. So then the Fed raised rates for the first time since 2008. And then we had some good news along here as well. This isn't all bad news that happened in 2022. Along the way, some good stuff was happening. And I think this is what we continue to see in all the crashes. The good players still make good progress and come out of it even stronger. For example, in the dot-com bubble, we had Amazon crash 90%, and they're way beyond where they could have dreamed of, even in the peak of that bubble. But Ethereum passed its first major test in proof of stake transition, happened early last year. But then we had a lot of bad things happen. Luna and UST collapsed, marking the most damaging event in crypto market history. Lending platform Celsius declared bankruptcy. Hedge fund Three Arrows Capital declared bankruptcy. And OFAC sanctions open source software Tornado Cash. So just like bearish event, bearish event, bearish event, bearish event. But as you can see here, we're, I think, looking at just like the total market cap of crypto is what this chart is. It really has been bottomed out, I feel like, for quite a while. And this year wasn't even the peak. Like January, I think, wasn't even the peak really of crypto. But even after all these bearish events, like, yeah, we've still been going down, but we've been holding up pretty well if we're being completely honest. But then there was a number of bullish events in here as well. We had Coinbase and BlackRock announce a partnership. This partnership, I think, is actually really big because it's going to allow institutional investors to have an easy onboard into crypto, which is going to probably, I mean, it could be a bridge that leads to trillions of dollars poured into crypto over time, because BlackRock is like the biggest institutional investor if you think about the Wall Street space. Then we have Ethereum successfully transitions to proof of stake. I think this is really big. It means that Ethereum is no longer a big user of energy, but it does lead to some critiques and questions as well. I personally stake through Kraken. Kraken is the fourth biggest staker. The three biggest kind of pools, because people don't really want to stake Ethereum on their own. We'd rather just do it through a pool and give up like 1 or 2% of our yield. Well, the biggest pools actually have like really big controls of Ethereum. So there's questions about like the real decentralization of that. And honestly, I'm thinking once I'm able to withdraw my staked funds, I might start staking on my own since I have enough to stake on my own. And I think that we might see more decentralization once you can unstake. But that is an interesting thing. But overall, I think this is very bullish. I really want to get into how this actually really slowed down the inflation rate of Ethereum. Really exciting stuff regarding that. But we'll do a whole video on that I'll record it after this one. And then we have Bitcoin's hash rate hits an all-time high, which is really good for Bitcoin as far as security and that sort of thing goes. And then you have some bad stuff to obviously end off the year with crypto exchange FTX, scam, bankman fraud, declaring bankruptcy. Then we had prime broker Genesis and Gemini's earn halt withdrawals, and lending platform BlockFi declared bankruptcy as well. And like, this is just really, all this stuff is super damaging for the whole space, because guess what? FTX, they sponsored like a lot of YouTubers, and I think we did like 2 or 3 FTX videos. They seemed really legit. I mean, Tom Brady and people from like Shark Tank and stuff were talking about FTX. I mean, a lot of the other finance YouTubers I was watching were talking about FTX, and FTX was getting covered by a bunch of news media. Like, no one could have known. But then when you have like that happen, well, I mean, it affects the whole space, and it makes the whole place just seem way less trustworthy, which makes a lot of sense. I mean, it's made me less trustworthy. Trust me, we have not promoted a single exchange since FTX collapsed. Not because good exchanges haven't reached out, because I've just gotten so much sketchier. So I get that the viewers are sketchier too. I mean, if you weren't, then I would actually be worried. But yeah, so overall, it was just a crazy year, and we lost $1.5 trillion in market cap. But overall, I think that like the fundamental story, it's still really, really strong. So if we look at this slide on page 51, you can see, and this stuff is true about Bitcoin, I think, and Ethereum, but censorship resistant, the barriers to transacting on Bitcoin are low, and the only requirement being possession of a private key. This is really, really good for just giving more people access to the financial system and opportunities to the access to having opportunities in the economy. Then Bitcoin is inflation resistant. The number of Bitcoin created is mathematically metered. And actually for Ethereum, we're going to be getting deflationary in time, and predictable according to a predefined schedule. The supply of Bitcoin outstanding is 19 million now and capped at 21 million units. So this is true. Bitcoin isn't going to inflate. But I think in the real economy, we're going to maybe start getting into a little bit more of a deflationary risk on period, like risk of deflation more than inflation. But this is definitely true. Bitcoin is seizure resistant. And I know for a lot of us, especially younger people, you hear seizure resistant and you're like, that doesn't seem like that big of a deal. Like, no one's going to take my stuff. But it's like, we just haven't lived through a time when the government has decided, hey, all that stuff, it's ours. All your cars, ours. Your guns, ours. Like, but that has happened repeatedly throughout history. So to think that it can't happen again is inevitably what would probably lead it to happen. So we have to keep vigilant of that to make sure it doesn't happen. But it is, I think, actually a real big benefit of Bitcoin and Ethereum and the whole Web3 space is the seizure resistance of it. Ensuring independent property rights, secure custody, just really, really great stuff. And then Bitcoin is also, and Ethereum, auditable, and transparent. So governments should really have no reason to dislike it. It can all be done above water. Bitcoin's decision-making is transparent and decentralized. Running a full node, a user is free to validate transactions and audit supply. So overall, like, you had all this bearish stuff happen right last year, but the fundamental picture, despite that, is still really, really strong. So I think the same thing is true about the fundamental picture of Web3, talking more about like this game is about crypto gaming. But I think Web3, the fundamental picture of that is still really strong. Web3 is also user owned. Web3 relies on protocols, not platforms. Web3 enables new monetization paradigms. I think this is really, really cool. This is one of the reasons I'm so excited about giving us player ownership in these digital worlds, is Web3 enables economics into software, enabling users to monetize and participate in network development. And this applies to video games as well, to playing the games, participating in the economies. Web3 enables the convergence between consumption and investment, which is also super cool. Consumer behavior is shifting as the economy becomes digitally native, enabling a new paradigm for purchasing, owning, and using goods and services. And like this stuff, I'm still just as excited about it. So we come to a point here where we have had a massive loss in the market cap of the crypto space, but then you can look at the price, but then you just ignore that for a second and you look at the reality of the situation, the fundamental pictures. And they still seem really, really strong, almost even stronger. Like I feel stronger about the need for digital ownership. I feel stronger about the need for like just revolutionizing the entire monetary system and just like giving property rights. I think that's so much better for everyone. And it seems like a really great idea still. And the market cap's so much lower. So I just feel like that is opportunity. So now if we look at this last chart here, from ARK Invest, here's big ideas. This is, I believe, on page 54. Crypto assets could rival and redefine traditional asset classes. So this is a prediction of market capitalization in 2030, according to ARK Invest. I've said this in the other videos, but for those of you guys who don't know, ARK Invest is an actively managed ETF. I believe they manage around $50 billion of assets, and they are investing in disruptive innovation, which is what I am very excited about as well. So we can see global real estate is where most wealth in the world lies. Global real estate, $280 trillion of wealth is stored in real estate. Then we have global debt, $123 trillion in global debt. That's just like people owning bonds. So it's like the money is lent out to others, but it's still wealth that people have. Like it's still liquid wealth. You can trade like the debt. Then you have global M2 money supply, global equities, another about 100 trillion each. And then gold, 12 trillion. And then crypto assets right now, 1 trillion. So if you compare crypto even to gold, 10x we can get in crypto just to get to the size of gold. And crypto's so much more useful than gold. Like I cannot even begin to explain all of the ways in which crypto is better, easier to use, has more utility and usefulness than gold. It's crazy. It should definitely be worth more than gold. So I feel like that makes it seem like at the very least we have a 10x coming, but this is what ARK Invest predicts for 2030. According to our research, cryptocurrencies and smart contracts could create 20 trillion and 5 trillion in market value respectively. So they're expecting a 25x in the total size of the crypto market from 2023 to 2030. So we're talking just over the next 7 years, a 25x. Like this space is going to be explosive. Like this is a really, really exciting space to be in. And the fact that we're in a bear market, guys, you should be buying. I feel like not financial advice. I'm not a financial advisor, but that makes me really, really excited about being in this space. So now let me talk about the sponsor of this video for a minute, which is Gala Games. I think that Gala Games is a player that's doing a ton in this space to push real player ownership forward. I've been talking about Gala from long before they sponsored. I've been making bullish videos about them because they're just doing so much for the space. I am so excited about Mirandus. It's going to be an epic fantasy RPG with a full on-chain, like real property right economy, and players are literally going to be producing stuff in the economy as well, like from growing crops to like crafting mead in breweries and selling them in taverns and like forging and creating weapons. Like this is just going to be such a cool world, and we have a new playtest for this coming soon. So if you guys aren't signed up for Gala Games, I personally believe, and I would say this sponsored or not sponsored, that Gala Games is the #1 player in Web3 gaming, in crypto gaming, in blockchain gaming right now. They have over 50 titles coming, and wow, the game just looks more beautiful over time. They have like some of the most amazing team ever. But yeah, you should sign up. Register link below for Gala Games. Currently, Gala is selling the stallions. Any stallions that don't sell, I believe, are going to be burned after this next playtest that's happening in March. So feel free to look into that. I also, if you actually want to buy NFTs for this game, I recommend checking out OpenSea as well. But this is the crypto game I am so excited about in this space, and there's some exciting coins we're going to talk about in this space as well. But yeah, that's our sponsor, Gala Games. And overall, guys, I think that yes, this has been a rough year. Maybe things don't boom this last year was a rough year. Maybe things don't boom this year, but I think that this year has a lot more likelihood to be exciting for crypto investors than not exciting, at least when you start to get to the back half, if interest rates start going down. But there is the risk of recession. If there's recession, I think that could be bad for the economy. But honestly, a lot of super risky asset classes like stocks and stuff, they tend to lead recessions. And in the middle of the recession, the stock market has like already bottomed a year earlier and is actually starting to recover during the worst of it. So during recessions is actually a good time to be buying stuff. So my advice, if you're bullish about this whole space, dollar cost average into your favorite projects, and I think that you can't go wrong. I've been thinking about this a lot, and I'm really leaning toward it. I think I'm going to start doing a private kind of investing thing on the Patreon, where I'm going to take all of the Patreon funds and make a portfolio where I'm investing like a crypto gaming portfolio for gains. I think I can like way outperform the S&P 500 by far from this point. And yeah, essentially it will just be like all the Patreon supporters are going to be able to see the buys and sells that I make in that Patreon portfolio, and all the funds are going to come from the supporters. So I don't know. It's going to be like a cool, open and transparent portfolio for the community. Plus you get to support on-chain gaming, the creation of the content, and stuff like that. So I'm trying to think of a way to do like a more of a win-win. And what I might actually do is like an exclusive video once per month as that Patreon revenue comes in, where I just talk about all the buys that I'm making in a video, in an exclusive video. So if that sounds good to you, let me know in the comments. Don't join the Patreon yet though, until I actually make that a real thing. But I'm leaning towards it. So enough rambling. Until next time, everyone, have fun investing in and roaming the metaverse.